If I were American, I'd consider leaving the country. People don't like when I suggest that, but buying gold is a great way of protecting your finances. They're going to come for confiscation, which is capital gains taxes. You may as well call it confiscation. They are devaluing your currency. It is a license to steal from the citizenry. This smells like a pre-Bolshevik revolution.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Francis Hunt joins us today. Better known as the market sniper, Francis built the Hunt volatility model, which offers traders a unique and technical approach to trading in all markets. His views on gold, silver, Bitcoin, geopolitics, and more have made him a favorite and sought-after speaker and guest. And we're delighted to have Francis join us once again today. It's time to saddle up and silver up for Francis Hunt. Francis, welcome back to SBTV. How are you doing?
Great to be back with you, Patrick. Thanks for asking me on.
Glad to have you back on. I have to start off with the obvious. Gold has been hitting all-time highs seemingly multiple times each month. What reasons can you offer for this gold run?
Well, there's a fundamental answer to that, Patrick, and there's also been the technical answer, which we've been talking about a number of times that we've appeared with you, and we've been pretty bullish. And the difference is we have had moments where technically we've told you it's not looking like it's going up for a while. They were quite a while ago where we warned you're in a bit of a containment period. So we're not every day always bullish. But let's start with the fundamentals. We're in a debt-based collapse. You've just had the Fed cut 50 basis points, which is essentially 2x the normal standard of a single. And what's gone on is the US 10-year has shrugged that off and moved back well above 4%. And what that's actually saying is you might want lower rates, but us in the market that have to buy debt instruments for which you are proliferating on a scale untold of. So just as their September year end occurred, they put off issuing a lot more debt, by the way, the Fed, that's my apologies, Yellen. And then as the new month started, they ran up 500 billion in a matter of about 6 days. Because that's not going to count for this current year. It's going to roll into the next year. So it just shows you the skullduggery, and that's political because of an election coming. And of course, that money can be used now for a bit of feel-good factor and stock market factor, whatever else. Anyway, that's a digression. There is so much debt that fiat and debt are going to have to devalue. The American economy are going to face a multi-decade stagnation in real terms in just about every asset class, property, equities, and very definitely in the debt markets. They're also going to face stubbornly high interest rates. We were the one 4 years ago in 2020 that said the 40-year bull market ended. Can I now tell you that we've been joined by Paul Tudor Jones, the legendary hedge fund manager, who now says he's short debt and long gold. We've been joined by Stanley Druckenmiller, who says his 20% of his home office fund is now dedicated to shorting debt instruments, which means valuation down, interest rates up. And Zero Hedge were running an article literally 3 or 4 weeks ago that's basically was saying what we said 4 years ago, my apologies. Is it time to consider that the debt market, bull market is over? And I'm like, hello, just asked a macro technical analyst. A melt-up, blow-off was the end in valuations. It went with shutting down the entire global economy that crashed equities, that pumped a lot of money, and it all went into the safe bid of bonds. Bonds used to be boring, but very safe. They then lost 45% to 50%, depending what you're looking at, in the subsequent correction. That is not safe anymore. It used to be stable, boring, and safe. What's the problem? They did the fastest rate hiking cycle they've ever done, which is actually a devaluation of debt. That's what Volcker did in the 80s when Nixon and before him LBJ and all those that were involved in the Vietnam War bombed it to absolute cinder using more munitions than they did in World War II. You just didn't notice it because it was in a far off land where nobody spoke English or reported back on any great scale. So much debt was built that Volcker took the rates up to 20% at one point to deflate that value of that debt. And that was pure stagnation. You had low economic growth, you had filthy streets in New York with drug pushers and everything going down. It was seedy, it was dirty, it was everything throughout that, all as a result of that 1964 to 74 war, that 10-year war that only officially ended in 74. And of course, the event of 1971 that many people will know about, when he removed the fix of the currency to gold. And as a result, you had a huge gold run as a result of that, and stubbornly high rates. So people that say gold won't go up on high rates, let me tell you, when the reserve asset class that's supposed to be risk-free is collapsing in value, aka debt, and stock market is super high priced, you've got Nvidia at 58 times sales. Scott McNeely in .com said, I never wanted 10 times sales. How can you value a company? We've got salaries to pay, tax to pay, and things to do. How can you even value us at 10 times? Well, we've got 58 times on Nvidia today. A super high valued stock market, particularly in that area. You are seeing the 60-40 die and stagnate. Both those asset classes will stagnate. Stubbornly high interest rates are going to cause those that are in property in America to stagnate. The ability for people to pay rents or to get finances got higher, because the 30-year cost now to do mortgages is get higher. That's going to feed into inflation. That means it's a doom loop, essentially, but there's real opportunities to combat that. And you're looking at the canary in the gold mine saying, remember me, the money of millennia. We're talking about a failing monetary system. The fiat debt creation, where the one borrows into existence the other, they have an umbilical cord between them. You're going to see contraction in debt, and then you're going to see contraction in the currency, and it's going to be staircase. That's going to bring utter stagnation. Salaries aren't going up. That's why you're seeing the unions campaigning and getting higher than normal percentages, because of living costs and living standards. And the only way people protect is to have the perfect tool for stagflation, and we're going to get a hyper stagflation, because the key different point from Volcker to Powell today is it was 30% debt to GDP way back then, and you're on 120 without your obligations to Medicare, Medicaid, and other welfare projects that some Boston professors have put through 600% GDP. This is going to be a stagnation era. Personally, if I were American, I'd consider leaving the country. People don't like that when I suggest that. But buying gold is a great way of protecting your finances. But they're going to come for taxes. They're going to come for confiscation, which is capital gains taxes. You may as well call it confiscation if you set the mark. They are devaluing your currency, that anything can be deemed to have a capital gain in nominal terms, not in real ones. It is a license to steal from the citizenry. This smells like a pre-Bolshevik revolution. Where you're having an asset stripping, and I just hope it ends there and doesn't lead to real citizenry counts being hit as a result. So that's why gold's going up. We're in a debt-based collapse.
If you're enjoying this interview with Francis Hunt and I, please consider subscribing to our YouTube channel. And if you are a subscriber to this channel, please do check to see that you are still a subscriber to this channel and you have not been unsubscribed. I myself have been unsubscribed from this channel without my doing or knowledge. And as always, if you have any questions about wealth protection, storing offshore, precious metals, or even generational wealth, please feel free to email me at patrick@silverbullion.com.sg and visit our website, www.silverbullion.com.sg. Yeah, it's quite a bit. We are surely going to touch on quite a bit of the things you just said, but I want to get back to since these guys are probably never going to come on this program, Tudor Jones, Druckenmiller, um, mainstream media. What is taking them so long, or maybe why haven't they seen what you have seen for so long?
I think more people, insiders, have seen it. I think the big hedge fund managers were late to see it, but are positioning. It's such a big trade. You're late, but you're still early, if that makes sense. Because there's so many trillions of buildup that even if you don't catch, it's kind of like arriving for the movies 15 minutes late and you missed a bunch of adverts and the titles are just rolling. You actually haven't missed anything. This is a long old movie, and you guys watching it that are thinking about taking action, your audience, the show's really only just beginning, and it's a classic. It's an epic. We're talking Dances with Wolves plus with all the editions long. I would say it's Dancing with Gold Bars or something else, or maybe the Wolves is that government that you think is working for you, that has put you on an inflationary cycle that is now in the disorderly decline stage. And there's only really one defense for that, and that is physical things that you own outright that are known to intrinsically hold their value that you yourself can control, because possession is still 9/10 of the law. Make them come and try get it out of your grubby little mitts, and that's a lot harder for them to do. That doesn't mean they won't try, but it's going to be a lot harder. They'll go for the easy pickings first. So I'm expecting wealth taxes on property. It'll probably start on the rich houses, it'll end up on all the houses. I'm expecting increases of taxation. They can't afford to provide the services that they've committed to. They don't have the money. They never put aside for it. I'm expecting anything. This is a monetary system collapse. So I'm actually short oil, long gold. For the people that are long general commodities, and oil will recover and it will go up as part of the long-term inflation, but short-term, the consumer and the retail is wrecked. It's a monetary system. You want the monetary commodities. It's a monetary system failure. Buy the tool for the time. I can bring a massive ass 16-wheeler monkey wrench for you to use while you're at dinner, but it's the wrong tool for the time. If you're a truck driver and you've got a flat, it's the right tool. So the tool for the time in a monetary failing system is to be in the legacy or the original monetary system that has never failed and always will protect your net worth and your balance sheet. And I'm not talking 5% like this. I mean, I am grossly overweight and have been for a lengthy period in the precious metals market. Literally every tick of a cent is making a material difference in, my positioning in that space. And that's how it should be, because 5% will protect 5%. Listen, if they're telling you they're going to burn your house down, are you going to insure 5% of it? Why not over-insure it with 3 different people and at 125% of its value? Then buy a better house. They're telling you everything. This is a war. They've told you they're coming to burn your house down. This is war on your asset valuations, and they're going to play monkey business with the nominal value because the fiat will be devaluing and the debt will be devaluing, that you'll on the surface look number good, but you will never feel so poor. And that is the sleight of hand of inflation. It is the silent thief that compounds against you. And here's the tool that protects you. It's the gold market. Gold, gold, gold. And we told you that there was a technical break at that 2000 level after the once, twice, 3 times a lady. We say always go with the lady. And we got your setup. You actually traded 1984, ominous number there, in February. And now you're sitting at 2,750. You threw 2,750. It's actually come back a little bit. It's at 2,744 right now as I look at the charts on my left there. But essentially you've made the better part of $775 on a 2000 sub 2000 entry if you bought in February. That's just in the last 6 months. That's in the last 6 months from the low. And this baby hasn't started. I told you, you've just missed the titles. They're telling you who's acting and the sub rolls are running. The story's about to start. They're still playing the music. You haven't even been introduced to the characters in this movie. And boy, are we going to have some juicy ones. And they're going to be deeply unpopular. It's not going to be fun to be living in America anymore. By the way, a lot of this goes for the West generally. I'm not picking on Americans. I love them. I'm trying to warn them. And as I say, it's going to be the loss of sovereign or world currency is a massive thing. it takes away so many privileges you once had that you took for granted. And it's through the abuse and the exploitation of it that eventually sees you lose it. The last handover from the British pound to the dollar was actually quite a friendly handover. They were on the same side in the war. Britain had to load up on debt. Eventually they couldn't hold it. It's kind of like a relay baton. I kind of saw I wasn't going to make it and I handed the baton to you. This is a hostile one. The BRICS versus America, Russia and China versus America. This is not a pleasant one. There's a lot of differences to the currency handover. And these guys are buying gold and they're stopping using the currency, and the reduced use and the non-investment into the asset class, which, by the way, Janet Yellen has accelerated. Biden and Harris has accelerated by the confiscation of Russia's money. So they actually are bringing about the collapse of the system. They have narrowed their pool of usage, and it was the high volume of usage that kept demand for dollars and debt instruments. And the Saudis, for appearances, are not showing up, but I think they've had deep conversations with regards to the BRICS meeting, which is something worth mentioning, the 24th of this month. We're only a handful of days away from what's happening over the next few days. And they actually, in truth, don't have to do much. They've often been quite damn squids. They just have to sit and wait. The Chinese have a saying, actually, and it's ironic that it's a Chinese saying. They say, lie on wait on the river bank for long enough, and eventually you will see all your enemies wash right by. So sometimes don't go out to take somebody down. When they're doing dumbass, stupid stuff, sit by and let them finish the job. You'll watch their corpse come down in the river. And that's an interesting saying. It's one of great patience. You don't have to go push someone off a cliff. If they are walking the edge, they'll make a mistake in due course if they're doing stupid things. And in essence, that's where we're at. And it's very different to the mainstream media message of all Russia bad, China bad, all of this. We're meant to be divided into camps and be pro this. I can't listen to the BBC. I can't listen to the MSM. I don't. I occasionally see some on X and some other more open people parroting the views. It's laughable. It's over. The debt system is over. That forces discipline on somebody who's been ill-disciplined all their life. That's a horrible period. It's an awful obstacle course to run. If you've got overweight, sick, you're high on drugs, which is the debt, ever higher levels, and now I make you run an obstacle course, you're going to die of a heart attack. And my message to the people hearing this is, no, it's not just a black pill and shock. There's real opportunity. Build wealth out of this. This is a polarizing event. Recognize it, and inside of that, there will be great opportunity. But for that, you need to be out of debt because the interest rate spikes. Everything's going to get more expensive. If you're relying on consumers to keep endorsing and supporting your product, you should prepare for hunker down and sizing down if you run a business, or you should move that business elsewhere where the trend is better. I'm not saying there's a long list of countries that have a better lifestyle than America. I'm saying there's a long list of countries whose trend is turning up as America is turning down. You don't have to take the elevator down with that. You can check out up here, get all that wealth, put it on the new system that's moving up, and be better. And that's why I'm even saying you need to contemplate leaving America. They won't like it. I know they won't like it. You can hunker down, buy gold, do all the other good things. But let me tell you, if you have a consumer business, your consumers around you are going to be wrecked. If you have a finance, anything that's on finance, the interest rates are going to be too high. You're not going to be able to afford it. You're going to have a major, all around you, the environment will be darkening. And that makes it hard. I like positioning in front of the big waves. I've become a very aggressive precious metals proponent, bull, asking to appear on shows like yours and others, because I feel it's the message people need to hear. Those that listened are sitting on a 40% just this year, not to mention where we were during CV19 and before. So that's how we should position to win in this game. And people have got a big, big obstacle course coming their way. And you can either kill it and have all the right tools, or you're going to have a heart attack. That's kind of it.
Yeah, I completely agree. You said something interesting though in there. You mentioned how when the UK when they lost their reserve currency status and it went over to the US. You kind of had a friend giving it to a friend, but you brought the point that this time it's different. I mean, it may not be a friend passing it on to a friend. And I'm just really curious here now if it really goes that way, where, two people who may not be friends fighting over the world's currency. How bad do you think this could get?
Well, the point is, people can actively do things to make it worse for your nation, because you fought them, you stole their money, you did lots of things, and you never gave it back. So it's almost like a fight, as opposed to, look, I'm no longer good for this job. I'm handing it over to you. Shake my hand. All the best of luck. Serve it well. You're not going to go out of your way to hurt someone like that. If you're throwing a punch in their face and you're starting a brawl, well, once they've punched you and knocked you over, they might start strangling you as well. And the point is, why wouldn't they? You've enraged them, and you've done that. So it's a different dynamic, and you could have your face really rubbed in the dirt. As a result of the trajectory that the government has taken. I'm very well aware that the average citizens of America, particularly those watching sound money programs, are not pro all these war excursions, etc. Nevertheless, these people are doing it in your name. And that's the problem that is faced. And many people believe, well, you put your particular governments in charge. And as I've made the case, it doesn't really matter mathematically if you get Trump or Kamala in at the moment. I know people will go, don't say that. I prefer so-and-so. In terms of the financial aspects, we are a 747 heading into the Rocky Mountains at a near 60-degree angle, and we're 20 meters away from the mountain, and we're doing 850 kilometers an hour. So, I can get the best pilot in the world. I can get the best pilot in the world to take over the realm. Let's say Trump happens to be that. And what can he do in that situation? The situation of the financials is well beyond anyone now. The markets are talking. You had a double point cut and the 10-year has gone up. Now, I'm not saying it won't go down one more time. I'd actually like to show you the 10-year chart and show you what I think will happen. I think it will go a little higher and then it will come down and around. But the pattern, and we're the ones that 4 years ago in discussing with you, Patrick, said that the bond market has turned and no one's talking about it. And now what you find is that big names are now talking about it. They may have been talking about it a year or two ago and you're only finding out now, but you heard it on your program, Patrick, from me showing up right here and saying a blow off in the valuation of bonds, a capitulation in the rates was the end of a 40-year bull market and was the first and only call on a macro scale that we've ever made, because we are, I don't want to say the best, we seem to be the only macro technical analyst out there. We don't need to be the best. There's no one else competing, because no one else was saying in August of 2020, some 4 years ago now, that this is over. That's how markets end. And that's what you get in dot-com boom. Don't people know? Technically, you get an absolute blow-off run before it dies. It's that last bit that kills all the shorters because they are tiny bit early. And it's when the taxi driver and the shoe shine boy is all buying stocks. That's the melt up. And that's what you had in bond valuations. They shut the entire planet for SMEs, certainly, although the oligarchs got to carry on, and that's what's going on. So let me just show you, this was the gold chart, but I just want to mention, so this was where when we showed up with you and said, this is a key breakout now. This was fourth time a lady when we went above the 2000 mark. That is a 2000 mark over there. And this is your winding up setup that literally since there, you've done that. That's your gradient of increase since that triggering event on that pattern. And that is currently a 37.66 risk reward when we take our first level of profits around the 2,890 on the leverage trades. We never sell in our investment, by the way. This is a long play out, but we do think there will be some degree of pushback that will occur. I don't think they want 3K in the same year that you traded 1984 over here in February of the year. That would be such a terrible indictment on the state of the world right now. But that 10-year that I was talking about, I want to show you, because this is what's happening with rates generally. Our technical position is that you are now in a falling wedge. Just before I go into this falling wedge explanation, I just want to remind everybody of this. This was the end of trend. This is rates heading down, and that's, if I invert the chart, that's valuations of bonds. So bonds, it's kind of the inverts, just as a quick cheat way. Long-term bull market in bonds, major blow-off. That is the textbook for end of trend. And I don't know why this wasn't being discussed when it happened. We traded short early there on a bespoke HVF setup. You then had a head and shoulders there. You've gone all the way down. You've gone all the way down. So that's on the rates. Now, if we just take you back to current, what's happening now on current, a more shorter term view, and I go back just to the yields. You've been this turn, you're in a falling wedge and you're breaking up. This is on a monthly chart. I'm going to just take it down to the weekly. You are seeing the 10-year going up in weeks. It's gone up once, twice, 3 times, 4 times. Those aren't reds, they're small candles. 5 times, 5 weeks. So you've been flat on 2 of the weeks. You haven't put in a red candle on a week in 1, 2, 3, 4, 5, 6 weeks. So we think you're going to go up over here, and then potentially there might be a bit of an easing. That's when everyone will say, you're wrong about rates going up, Francis. Remember, time frame. Time frame. There will be a pullback. It's what happens a little bit after that. You've got to let the whole story play out. It could pull back to there. It could even pull all the way back to here, for example, around 3.5. That's how falling wedges work. We've got our first impulse there, our second, and we're waiting for a third, up and over. But once you've done with that, we expect you break. And that is where you go higher. And that could see you back up at the 4.9s before you rest again, or it could even see you continue up out of a falling wedge. A falling wedge is an upside continuation pattern, and you clearly were going up into this. But it needs time to play out. We're 2/3 of the way there. There is a little bit of up more to come, and there could be a little bit of down to come. But longer term, if, by the way, you do get to 3.4, I would encourage everyone who has a property who can't settle their mortgage to fix at that point. That will be probably one of the best decisions that you can get. Although I'm imagining the actual mortgage rates will not come down near as well. You've just had a new high on the 30-year mortgage offers deals with this move up. So all those needing to refinance and all those new buyers in a absolute recession. We are in a recession. We have been for 2 years. I don't care what they say. We met the criteria for it. The excuse of the labor market was a lie. They lost 818,000 jobs. They did many other downside reversions after non-farm payrolls. So the whole basis of what they did is because of the debt market. Why do they lie? Why have they misled you that the economy is so strong and pretended it's stronger than it is? Because they can't afford the cuts. Why can't they afford the cuts? Because the people that have to buy the debt at higher valuations are not going to buy it. It's not worth that. They're not going to get a lower yield below the inflation rate and lock a negative compound. And in fact, the faster you're adding debt, which Yellen is doing at a record rate, the more proliferated it is, the less likely you're going to have buyers, because something that is proliferated is not scarce and not valuable, and we have much higher inflation running. So you're locking in negative real interest rates, and you're getting back a much devalued bond. Why? Because they've got this huge ball of debt that they need to devalue, like Volcker did, as I already described, from the Vietnam era all the way into the 80s. That led to one of the biggest gold market bulls that you're now going to have again, only it's going to be coordinated on a globally macro level instead of a kind of American Western level where we weren't talking to China, they were in their own bubble. And as a result, it's going to be a whole lot bigger. That's the silver lining. That's the silver lining. That's your protection. That's what you got to do. But you also don't want to be in a country that's going to do all it can to squeeze every little juice out of you, drop of juice, no matter how smart you've been.
Right, right. That's a great point. Great advice that you gave there, Francis. Um, how long? How long do you think we have before the Fed actually has to turn around and start raising rates? And maybe the gold bugs are already sniffing this out, where they're already moving into gold, knowing that the rates will have to come back up.
Yes, as I mentioned, the traditional story you're given is that rates are bad for gold. This is not traditional times. What people say, oh, many traders confused, puzzled by gold going up in this environment, rates and all of these narratives, puzzled. There's nothing puzzling about this. You have a death of an existing fiat and debt borrow into existence. They go together like an umbilical cord. They will contract in staircases. First, the currency devalues, the debt devalues. They've taken turns on it. That'll depend on the monetary policy. But the alternatives to these reserve assets that are no longer showing themselves to be risk-free reserve assets or paying meaningful yields against a much higher inflation number is that you buy something that retains value regardless in an accelerating fiat devaluing environment. And that's gold. It proved itself before this fiat system, and it'll still be proving itself long after this fiat system. And that means you're getting rotation out of debt. And that's why these rates rise. There's less bid, there's less desire for the asset class. The rates have to go higher and offer bigger yields to get new money to come and consider it as an asset. Because too much is exiting that. You already have an over-expensive stock market, and people go, wasn't there another asset class instead of this binary stock market bond 60-40 story? Oh yes, that thing for stagflationary times, gold. And that's where the bid is coming in on gold. And that's what I'd say. And that's what you're seeing in this chart price action. It's not a normal amount of appreciation in such a short time frame. February 1984, right the way up to this year, and we ain't done yet.
Yeah, Francis, I know we're touching on various topics here, but I want to ask you, what topic has got you talking to friends, colleagues, clients about the most?
My personal frustration, my biggest personal frustration is the most people that I'm having to engage with on a day-to-day basis don't understand how the system works, which comes back again, I'm afraid, to the debt system, and that you are witnessing it actually fail. They don't realize how much changes in their world when that occurs. Because you've got banks like Bank of America that bought 2 trillion of government debt, that the government then hiked the rate so high that they've handed them virtually a 45% loss. These guys don't have proper balance sheets anymore. They bust. The intermediaries for the system, the banking system, are bust. It wouldn't shock me you have another banking crisis. You could have runs on the banks. So you're talking about bank crisis. You don't understand how loaves of bread could be $50. And wages will only go up a small amount more, whilst prices are going to go up a lot. And it's all about too much fiat and debt being devalued. And this means gold, thankfully, holds its value. You have to think, and people don't understand that. But the social upheaval, the knock-on effects of this, of the failure of the fiat system, is that everything governments have promised you they will pay, they will no longer be able to do. They can't do it. So they're going to renege. They're going to reduce pensions. They'll do it by inflation. So they'll create a lot of inflation, high interest rates, and you'll be real poor on your pension, where you thought $3,000 should have been enough. Now, $3,000 is like $500. I mean, what am I supposed to do with that? Can't make my rent check on that. Never mind live on that, So that's the great fraud. And so there's going to be a lot of elderly poor that are going to need looking after by younger people who are going to be in a terrible job environment, because you need to remember, America's primary export is dollars and debt. Again, the two things that go hand in hand. And every time China brought food for Walmart and goods, etc., you said, put it on my tab, here's a debt note. Here's a debt note in dollars. Here's a debt note in dollars. And now they're saying, we don't want that anymore. And in fact, you're pretty mean to me. Again, refer back to the Britain handover to US. It ain't like that anymore. You've been pretty mean to me, in actual fact. In fact, I'm not going to talk to you so much. And people say, well, Trump will bring tariffs. So I don't even want to address Harris because she has no competence at all. But Trump will bring tariffs. That's how he'll pay for extending his tax. Tariffs are inflation on your own citizens. because you're saying to China, we need those items, but you're selling too much to us. I'm going to tax you. I'm going to add a tariff on it. What happens to what do the Chinese do? They want the same margin they're making. They put the price up with the tariff, and the inflated cost of the item is sold in America at a higher price so that they still get the normal returns that they expect. Or you don't get it from China, you get it from somewhere else that makes it more expensively because they don't have the same scale or technology, and you pay more. Either way, you pay more. So what does it actually do? Saying I'm fighting for America is actually taxing your own citizens in inflation on cost things that they need. Because China will up the price to cover the tariff to maintain the returns. They're not going to sell to you at a loss. Why should they? Sell to other nations. Or you get it from somewhere else that doesn't make it as good and anywhere near at the same low price. Either way, your citizens pay more for you instituting tariffs, telling you how they're saving you. So inflation only goes higher. So everything Trump and Harris have said is inflationary. And you are in an environment where they need inflation because they need to devalue the debt. And how do you develop the debt? Devalue the debt, the rates go higher. So good luck if you have debt. Pay off your credit cards, pay off your personal loans, get everything that you have to hold on fixed terms, and eventually pay it all off. And at the same time, accumulate your gold ounces and get out of America. I know that's not popular, but you need to, it's going to go through the stagnationary 60s through the whole 70s. When you divide by the CPI, your stock market went sideways and down, your property prices, all of this stuff. Only it's on a much bigger scale and the scope to defend yourself. This is the simple thing that I most want everyone to understand. And most people saying, I'll never do it. Wait till you have to think the unthinkable, and then it's too late because the exit taxes will be in place. You're no longer the early adopter leaving. America is built on immigrants that left. Irish that left the potato famine for a better life. Polish that left grubby European kingdoms under monarchies that taxed the bejesus into them. French Huguenots that came to South Africa and went also over. Scandinavians, you name it. Germans that went for a better life to escape overarching post-war everything. You are a nation of leavers. Go where you're treated best. Sovereignness first starts with you. And if the country is no longer serving you, you either change it, I don't see that as easily possible, or you go somewhere where you're treated best as someone who can leave quickly. And you know what? Newer, smaller countries that are maybe not as high standard now, but are in upward trends will surpass. You get an opportunity to get in cheap, because whatever is going down, the West, but particularly the currency nation of America, whatever is going to go down hardest, whatever goes down, something else goes up. Liquidity doesn't die. It's like energy. You know, you can brake, and you've just transferred the weight of your car, how fast you're going into heat. And that can be reconverted back into energy. It's always equal. It's physics. The flow of the money is going elsewhere. Catch the right wave. Do you want to paddle upstream, or do you want to paddle with the flow of the money? The flow of the money is out of the West to the East, or the global South. Choose your destination, position where there will be entrepreneurship, low taxes. Do you know what? Russia's corporate tax, by the way, and I'm not suggesting you go to Russia. I don't like the cold that much, or there are some warm places on the Black Sea, but their corporate tax, I think, is 13 or 15%. You know? So the communist nations have become capitalist, and the capitalist nations have become communist via socialism and labor and extreme leftism, and Bolshevik communism is awaiting you, totalitarianism. And eventually you'll be trapped in your country because the exit tax will be too expensive for you to pay to leave. And your house will be worth half what it was because the interest rate is twice as much. And there's far less buyers because the boomers were the biggest generation and they ain't getting jobs that are paying that well. And you end up in a trap. And it's stagnation. Escape while you can.
Yeah, Francis, I, I've never heard really anyone in all the years I've been doing this come out and say these things. So I appreciate you coming out and saying it. Um, Definitely not easy to swallow if you, let's say, are from the U.S. or a country in the West that is going through this. But I think it is something to think about. So I thank you for at least planting that seed in people's minds to start to consider things they may not have otherwise considered.
It's a difficult one. It's radical. It sounds radical. But the key thing is you get a cycle, and you get re-entrench. We do hypernormality. We get into a state of hypernormality. Tomorrow is just today with a bit of extra time, and much like the previous day. But there are moments where entire decades happen in weeks, and we've been in a setup for such an event to occur. In other words, you're piling lots of things on top of each other. Eventually, there's a collapse. Each day you put another chip on top. Eventually, it falls. And the question is, do you see it and do you act on it in advance? Because everybody who says, I'll wait, maybe he's wrong, but the logic sounds right, but maybe he's wrong, and waits till it actually happens. And this is the trader's dilemma. Traders chase momentum because they're trying to reduce risk. They'll say, I don't want to get in he says it's going to go up, but it's not going up. I don't want to get in now. I'll get in when it starts going up. So they pay more later, have a bigger distance to stop loss, and a much worse asymmetric risk reward structure. You need to be early, because by the time you're in even the first half of the normal curve, the country and the nation that is losing citizens, that needs them for tax, starts making it harder and more costly for you to go. So it's important to be an early mover, and everybody wants to reduce risk by saying, I'll wait till I see it actually start to happen. And that's why they chase momentum in trades. It's kind of a FOMO. Then I know what he said is probably about to have happen. You're on risk regardless in a market, and it's about the risk of loss versus how much you gain. You could get out a very pricey stock market in America, very pricey property market still. There's still some people buying, and you could get out of a very pricey bond market, even though the rates are slightly higher, at very close to near high levels. You could go to another country and live like a king, buying at low rates, where their economy is going to start going up and be more higher valued, and you could be buying another set of stocks at the low ebb. If you wait, what happens is the ability for you to leave reduces, the value reduces, and all the destinations you could have gone have been creeping up slightly, and now you're hearing about people living great lives in nations you used to look down on, that you considered second world, third world, and having better cars, better lifestyles, and everything. And suddenly the world flipped, and you're not quite sure how it happened. I'm here as John the Baptist telling you an event is coming. Be early, or get stampeded by the time you realize it. Don't wait till your neighbor's gone, because then you know you're late. Watch, because that's how it's going to happen. The gold and the money is going from west to east, global south, however you want to call it. And so will all the garage businesses of the future in tech. They won't come out of California anymore. Funny that. Think about it a little more. But all the enrichment will go. You won't have an entrepreneurial environment. You will have very draconian taxes. It'll be a bad welfare state where most people are in serfdom because they can't afford it. They've lived beyond their means, and there's a payback period. Night follows day.
Amen. Francis Hunt, before we wrap up, can you let the people know how they can follow you and avail to the services you provide?
So it sounds incredibly dark, and I'm here to say I'm not psyoping you into depression. I'm telling you something that you need to hear so that you can take positive action and actually feel really good. Because deep down in many of you, subconsciously, you realize something isn't right. And I'm saying not only is it not right, it's badly not right, and it bites. We're here, and it's my sole goal, to help people build wealth and preserve wealth that are in reset in reset times, which is a unique set of economics that is probably case study history 300 plus years from now. The events of a globally synchronized West, particularly, but many other economies too, that are in a debt-based collapse. How do you manage this that you do not get smashed in this process? And this is game theory. It is so much involved in it. It's personal, it's social, it is financial, and it's economic. But if you retain wealth, you can always buy, and believe you me, in this environment, there'll be many people looking to sell things to continue to exist, your way into a better standard of life and existence. To find out more how we do that, you can subscribe on the Market Sniper. By the way, there's a free course in there on HVF method, which is what I've used to call the oil market short, to call the Euro Swiss franc short in 2009 before anyone knew the Greek crisis, all the major macros, to call the bond market a short and shorted TLT, either the trades and the investments on how to position for this time. So go to the Market Sniper on YouTube, subscribe there and grab the mini course, the free learning course. There's only an email you need to give, and we don't spam at all. You will only get your videos from us in a weekly newsletter. And then start that process. If you feel that there's something to what I'm saying after a while, learn what I'm about, the kind of ways that I speak, etc., etc. We've served many and are currently serving many Americans. You're the biggest part of our base. Many of you are listening, and I thank you for that. After that subscription, you have an option to book a call, and we like to speak in person. But take your time. Get to there when you're ready. But start thinking the unthinkable, because there's a difference between a snapshot in two worlds and the continuous stream. The continuous stream is deceptive. You don't see the change. But look at a picture of yourself as a baby and how you look today. I was supposed to have hair. Yes, and that's what's happening in real time economically. Anyway, we thank you all, and you can also follow us on X under the same name, The Market Sniper.
All right, Market Sniper Francis Hunt, I want to thank you once again for giving it to us straight. And I do hope the people out there will look for you and your services that, yes, will help put them in a position to prosper. So I thank you once again.
Absolute pleasure. Thanks for having me on, Patrick. All the best to you and your viewers.
That was the Market Sniper, Francis Hunt, sharing his views on the economy and geopolitics. To see more of Francis's views and work, please do visit his website, themarketsniper.com. If you like this video, please do subscribe, share, and give it a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.